this is a quick recap of the S&P 500, where we are at and where we might be going as we head into October week 2, 2020. Now we have the Fed minutes coming up this week, and at that last meeting, we were trading about right here. We were coming up against our 20-day simple moving average and failing on these little looks above 34.25. We hit a high for the week after the Fed released its statement that day at 34.2892 and rolled over and eventually came down to meet our September low, September Q3 low at 32.09. Okay, so that's where we were at then, and as we come into this week and we get the minutes from this meeting, I believe that we were on our way back to the scene of the crime at this level that we traded back on September 16th. But we got news Thursday night of Trump's COVID diagnosis, and we wound up doing this. Now here's a close-up of a similar chart to the one I was just showing you. And we wound up gapping down open all the way down here on Friday ahead of the non-farm payrolls report. Here we were on Thursday, touching up against 33.98, looking below 3,400. And I believe that if we had not gotten this news and rolled over like this, I believe that we were on our way to breaking through this 33.98 level, which is the halfway back for the month of September. A big range on September from a new all-time high at 35.88 down to that low at 32.09. I believe we were going to break through this and work our way back to where we were at when we were last trading in front of the Fed. Then if the market wanted to make sort of a double top against this, we could have rolled over one more time, or maybe the market would have redigested what happened at that Fed meeting after reading the minutes, and we would break out and continue on higher. But like I said, we got that news of Trump, and we got, frankly, a non-farm payrolls report as well that did not reflect the beat and the revisions up that we had seen on Wednesday in the ADP report. So we came in and we gapped down open below the 50-day and the 20-day simple moving average after we had just taken these two things out and traded and closed above them for 2 days in a row. But on our low, all we did was poke a little bit lower into this gap that takes us all the way back to the September 25th close. We held above the 10-day simple moving average and we reversed, shrinking this gap a little bit. And we traded up, but we could not get any higher than a 33.6910 on Friday. And that leaves us open a gap to fill to Thursday's close at 33.80. So as we go into next week, we are there could be a couple of things that happen. Maybe we shrug this off from Friday. Definitely, they are trying to push positive news about Trump, that he's getting better. He might even be getting out of Walter Reed and returning back to the White House on Monday. Maybe if the market really believes that and digests all of that positively, we are going to break back out over this 50-day simple moving average and fill this gap on Monday and trade up here and try to take out 33.98. If we get all the way up here to 33.98 and make a lower high and fail to get above 3,400 once again, then we could probably sell back off and your confirmation would be re-breaking the 50-day. If we come into the weekend, we're just going to sit and digest sideways for a day, waiting on some confirmation. We have our 50-day, our 20-day, and our 10-day simple moving average, and that 10-day is rising up, and it's going to meet us right here, right at the low that we set on Friday. It's going to be just below it. So if we come in and we just sort of digest here within Friday's range, that's probably just sitting and setting up for a move up on Tuesday ahead of those Fed minutes. If we come in and we gap down open and we break the 10-day simple moving average, we're going to go right here and fill this gap. And if this gap breaks, then we go right on down here, headed towards our 100-day simple moving average. And if that breaks, we back test the September low at 32.09. So it's really cut and dry right there. We have an inside day, a gap down that takes us down below the 10-day, or perhaps a gap up fills this gap and gets us back up here towards 3,400. And above 3,400, we go on back here to where we were trading on the day of that Fed meeting, and we get those minutes on Wednesday. Okay, so those are some scenarios setting up for us as we head into October week 2. If you like this video, if you like my charts, if you like my comments on the S&P 500, come join my private account at Kiwi24Carolyn. You can click on the link in my profile and get some more information on how you can join that account. Have a great rest of your weekend. As always, good luck and good trading.